stock tip. Best stock setups.
Welcome to a new episode of Stock Tip Daily Update. I'm Marcel Todia and we are going to begin with the latest in the markets. What happened yesterday? Yesterday the markets went pretty crazy, but it's not something we didn't see coming. Actually, we did see this coming and we were ready for it. I've been talking about it for the last 2 or 3 days. I've been saying that most possibly this is only a technical bounce and not a rally. And after the day we've had yesterday, it sure looks like it. And it also looks like the technical bounce is now officially over and that we've resumed our movement southwards. You see, this was yesterday's bar. This is a crazy movement. The market just fell 2.5% yesterday, and this was in the tech sector. In the S&P 500, 1.4%. This is still a huge movement. What to expect next? And the S&P 500 still looks pretty healthy. Also in the daily chart, we are still above the 50-day moving averages or slightly just beneath it, and our weekly trend has managed to remain mostly intact. What happens if we readjust? Mostly intact, and we are still above the 20-day moving average. So the S&P 500 still looks pretty healthy, but a correction now would make a lot of sense, especially if you take a look at the bigger picture. And the bigger picture is that since the beginning of the COVID situation, we've had here such a growth. We are talking about 120%. 120% of uninterrupted S&P 500 growth, and also our smallest correction here that will see us reach the target of 450 or the next target of 426 in perspective doesn't look that big, does it? So if you imagine it, you still remain with 100% growth in the last almost 2 years, uninterrupted growth, and a correction right now is probably the right thing. If you look at the Nasdaq, the tech sector, you pretty much get the same picture here as with the S&P 500. We've had a phenomenal growth of 100 and almost 50% in the last almost 2 years, and our correction so far has still left us with 125%. So I think we shouldn't panic, we shouldn't go crazy and screaming the market is falling, this is a crash. It's still healthy. You can't have uninterrupted growth without a correction or two along the way, and every correction leaves us a room for the next opportunity, for the next rally, like we've had here. And this has got us also no, this small one has gotten us 10%, and I think this one had gotten us 20% in October. So every correction is healthy and is welcome if you manage it right. The Russell 2000 is also looking pretty healthy still. I would say it's neutral to bearish. And this sector is not looking that healthy, and not as much as the S&P 500 and the tech sector, as already since the beginning of 2021, we've started to move sideways and to consolidate. So if the correction comes here, then there is a room for a hefty movement, and a target of 170 wouldn't surprise me at all. 170 or 175. Such a fall wouldn't surprise me all that much, but we are still a long way from there, because the Nasdaq is still not that affected. If you take a look at the bigger picture. Now then, the next thing on our agenda is the euro to US dollar pair. Yesterday I've decided to hedge the portfolio a little because we've broken out of this trend canal here. So I think a stronger euro is to be expected. That's why, as of yesterday, one half or 60% of our portfolio is again in euro. So we've hedged our positions a little, and this couldn't come at a greater time now that we are mostly liquid. We are mostly cash. I think 10% invested. Then the next sectors, oil is still looking good, still moving up, and perhaps a little consolidation here. We will see the next days what happens. Gold still sideways, hasn't broken out, and I don't think it will continue moving up. If you see the last 5 candles are green, too many green candles, and you get a huge pullback. That's not something you want. Silver, the same story here. We will consolidate perhaps a little in this area, and then see what happens. And then the financial market seems to continue the journey north, pretty much unaffected from the overall correction. I think the Fed's or the Fed decisions suit them, and that's why we see the situation as it is. And now for the second part of our video, again we are going to talk about the movements or the trades we did yesterday, and the portfolio, how it seems, how it looks today. My 2 active positions, position trades are still active and still looking healthy. You see here IRTC consolidates, still at the top, at the high, and I couldn't be any happier with that. And the weekly chart is what interests us, and the weekly chart at the end of the week, and we still have a day to go, but at the end of the week so far, this scanner bar is almost at the top, and if you'll still close at the top, then I couldn't be happier with this result. I think the next week isn't going to be that easy. I think the next week is going to bring us a little pullback in this zone, in the reach of 122, 123. It's still something that I can live with. And then ENVA had a great day yesterday. It continues to push up, and now my stop is here. It's about 40, and that would make for this level here, yes. After the breakout of above 40, I think I've moved the stop here. And what are the trades, what are the positions in the SPY and in the Qs doing? They are really healthy. I'm going to show you the Qs. Back to the daily chart. I've mentioned this week the first target would be 386 and possibly 390, and then we will let the market show us in which way to go, and at 390 or 387 our position got closed, got stopped. I will move now to the daily chart, to the 50-minute chart. So we've opened our position. I think we've opened it here. Here was our initial long entry with a stop here, so a pretty small risk, I would say. And from this small risk, we've had a huge movement. So we've moved upwards and then again upwards, and as we've closed our gap here, or tagged our gap, and the position was the long position was officially closed. I think the first profits were about here, and then the position was then officially closed, and and then as we've started moving south, you can't just be looking at one time frame. You have to look at the whole constellation. And I've seen here we were at about 390 and slightly touched the 20 moving day average as we've started moving south again underneath this gap. I've opened a short position with a stop above the high of that day, and we had a little undecisiveness in the market, and then yesterday, boom, a hefty movement south, and this is where we had our first profits. 1/3 of our position was closed here, and I've left the rest going. So at the moment, as we've reached already here, we've reached here 2 times our initial risk, and that's where we've taken 3% and 30% of our position, and the rest is still going. And if the market goes our way, then we should be able to make 356 or 350. This would be the next target. And as you can see, the same I did the same in the S&P 500. I've did it as a reflection of the movement in the Qs, but it pretty much paid off. The movement wasn't that so real here, like in the Nasdaqs, like in the Qs, but it's still a healthy movement. I haven't taken any profits here because we've only just reached 2 times the initial risk at the closing, and I wasn't at a laptop. I hadn't any access to internet, and I will see what happens today, if I can still take some profits or if the market decides to turn on us, but I don't think that will happen today. So this was our initial risk here. This was our initial risk, and at the moment we are about here. So we have now a little more than 2 times our initial risk, which is something I'm very happy with. And as I've said, when the market opens, then I will be ready to take 30% off, and the rest, I'm leaving the rest opened, so that the short position, if it runs well, then it's going to bring us another couple of percentages. So I think we are now, since mid-December or last week of December, we are now at a healthy 10% profit. So 10%, considering the market situation here, from here to here, the markets have managed 2.7%, and we are at the moment at 10%, 10% quota. So not that bad. And if you take a look here, the markets were in December still here. They were at this mark, and now they're exactly at the same mark. So pretty much 0 profits for the market, and we are sitting on a 10% profit margin. So I'm pretty proud with that. I hope you're also doing really well. If not, perhaps it's the right time to join stock tip and profit a little of the markets. Now, for the third part of our video, the setups.